You know what that sound is. The closing bell at the New York Stock Exchange, capping off another day of trading on Wall Street.
And it was a relatively positive day. Look at this. The Dow Jones is up more than 400 points.
The S&P 500 and NASDAQ are both up around 1.5% each.
And it's so unusual because we've been seeing so much red lately. For more on this, let's bring in Kristin Myers. She is the editor-in-chief at The Balance. So what was really driving the market today? We've been talking nonstop about midterm elections Tuesday. Is there optimism surrounding that or something else at play?
No, there is a little bit of optimism today, as you're just mentioning. There has been a lot of red across our screen lately. And right now, investors are honestly looking for any piece of possible good news that they can, really to boost some of their portfolios. And what we're seeing here is, honestly, a lot of the results when it comes to the midterms are pretty much already expected. They are expecting Republicans to really take the House. The Senate is still a little bit up for grabs, but frankly, we might not like political division, but markets definitely do. So if we see Republicans take control of Congress, of course, with the Democrat in the White House, markets are definitely going to love that news.
That's what I was going to ask, because I mean, I know that historically the market generally rallies following the midterms. You know, you just mentioned things might look good if Republicans take control of Congress. What would happen the other way around?
Same thing. So here's the reason why markets like division, right? Essentially what happens is they think political gridlock, which means that Congress won't be able to enact any kind of laws in any direction, which means that businesses can keep carrying on the way they've been carrying on, and their life can really kind of continue as normal. Now, I will say if Democrats were to take the House and the Senate, markets might not like that so much. But let's consider the flip side. If there was a Republican in the White House, Democrats took Congress, markets would feel exactly the same as they are going to in this scenario if we do see Republicans, as we have been seeing throughout the primaries, really regain control, at least in the House in this election. So that's essentially why political gridlock, markets love it because businesses can keep on carrying on with business as usual. I should also say that with Republicans taking control of Congress, there is, of course, possibly some sort of measures of financial austerity, which could be coming, a reduction in government spending, which, of course, investors and businesses also like.
Well, that's another detail I want to ask about, because how might change of leadership in Congress, or at least the components of leadership, impact the Fed's strategy on what it says is a continuation of raising interest rates to keep inflation at bay? We've seen the inflation rate slightly pull back, but, you know, ask anyone who's paying for groceries these days, it's still
they don't feel it yet.
Painfully high. So how might that be impacted based on the midterm results?
Okay, so I'm really glad that you asked this question, because even though markets do tend to look right past political headlines, what we have coming up this week on Thursday is actually the latest inflation data. And that's really what markets are going to be paying attention to this week, even more than who wins the House or who wins the Senate. Now, you asked specifically about the Fed's strategy and if it's going to depend on who is in the White House or who is in Congress. And the answer is an emphatic no. The Federal Reserve is strategically a nonpartisan, non-political position, which means that the bank is going to make its strategies for the good of the U.S. economy, regardless of who is in power. Now, we of course, when President Trump was in office, he went after Fed Chair Jerome Powell, Jay Powell, all the time. And frankly, it didn't make much of a difference to the central bank. They kept on the same path that they were on. I imagine that it's going to be the same this time as well. The Fed has said, we have one mandate. That's to bring inflation down to a 2% goal, and that's to maximize employment. They're going to keep on that path no matter who is in office.
The unemployment has been low. You know, one thing that is so fascinating is what you're saying is the fact that the markets like division, because what that means is things actually get done. Things actually get passed, regardless of who's in power.
Very interesting. Look, if you want to sound smart, just take everything Kristin Myers just said and tell it to your friends, because that was really useful chat. Kristin, thank you very much.
Of course.